Lennu, welcome to Exit. This is a Pantrium miniseries.
Hey, good to be here.
We met in Helsinki and you are a serial founder. You have gone through 4 exits already. I'm going to deep dive into all your lived experiences today. Behind those flashy, fancy highlights of champagnes and money flowing for exit conversations and stories we see out there, but talk more about the real messy stuff. So are you ready?
Let's do it.
When you're building, when you're scaling, and then when you're selling your business, how does that actually feel? But also, where do you start? Building with friends, having a co-founder, what to do?
Yeah, I think the ideas usually start with one person, but from my experience, I've been probably apart from 1 or 2 cases, I've been building with co-founders, and because nobody knows how to do everything by themselves. With experience, yeah, you learn stuff, but you never have all the details yourself. The most successful cases I've ever built or been a part of, the founding team has been the critical part. And I feel the same thing. I wouldn't start a new company nowadays without having sort of solid founding team in place.
And what's been your experience? Because I've had other conversations around building with your friends or getting a co-founder that you then realize later in your journey that there's just not a match. Have you experienced something similar?
Yeah, I think just as with any hire or employees, the founder should always be prepared to sort of move on themselves as well as with the co-founders. And yeah, I've had some experiences with founding companies with friends, and there is definitely positive sides to that. You know the people, you know how they communicate, what sort of starts to grind you.
Yeah.
There's that same question with everyone, and with friends you just know it beforehand.
Yeah.
Sort of successor planning would be, I think, pretty good word. Try to not to get married with your co-founders or the ideas or basically anything with the company, because whenever you're building this startup, all the parts and pieces are still moving. You're figuring out who are the customers, what is the business model, everything is moving. So the initial founders usually are not the ones who can take the business from the founding to, say, 10 million in revenue.
What is it that the company needs, or what changes from early days versus when you're then above a certain threshold?
Yep, I think the biggest changes come from the growing team. When you start off, it's just 1 or 2, maybe 3 founders. Everything is really straightforward. You share the same ideas, same vision. Then the company grows. There starts to be sort of differentiation between the positions. Some of the founders would be on the tech side, really deep side, and really good with that. Maybe not people managers. So they may start off as CTO and end up being maybe architect or something totally different. So sort of locking the positions and trying to forcefully stick to them. I think that's not a good thing.
I had another interview last year, and he was actually the CEO and co-founder, but as the business grew, he realized that either he had to mature and evolve himself, because what the original role as a co-founder and CEO is not longer the same when it grows. That role becomes much more about stakeholder management, insurance, fundraising, all of those things, versus, early on being hands-on, you co-build, you make, do sales, you're out to customer meetings, you probably also have a lot of marketing activities. So you're more like an octopus. And he had to almost take that decision on, okay, would I want to mature into that role that is needed, or should I not? And I guess it also varies from individual to individual if you're ready to take that move or if you prefer being an octopus.
And that is actually something that I learned from the sort of first few companies I founded, that I'm really at my best in the beginning of the company, sort of solving the big problems with markets and products and figuring out how this all is going to work. And when the business becomes sort of cloning and repeating itself and optimizing like one person there and 2 on the other place, exactly, operational, then it's sort of stops to excite me in a way. And it's just natural progression. You just have to know yourself and hopefully know your co-founders, who is best at what position and how to move along when the company grows.
we talk a lot about when a company gets mature enough, there is a need for going out and find advisors or building a board. What's your opinion on that?
I think it would go the other way around, because having board members, advisors, should be one of the first things you find. Because whenever you have more experienced sounding board to your ideas and challenges and stuff, it makes things actually a lot easier, not more difficult. And for example, at Paytrail, we raised our first funding round. I think it was less than a year from founding the company. And one of the key decisions I made back then is that we need to have external board members in place. Majority of the board members, actually. And the reason was that with a few previous companies, we sort of had the challenge of founding the company with friends, having a lot of opinions, nobody in the team having a lot of experience in growing the companies and running the businesses. So we ended up sort of going back and forth with the same ideas and not having anyone more experienced sort of to give advice. And at Paytrail, I decided to solve this problem since the beginning, and we had external board members and separate advisory board.
I actually had a conversation with a very early stage founder about this, like when is it that you should find a board or advisors, and he's looking for investment as well, or asking about the credibility in a way, because he's just a solo founder. And I said, well, that advisory board in itself can be your credibility. You don't necessarily need to have VC funding or backing. You could do it differently, because it's not necessarily the money they're looking for. They're just looking for that credibility stamp. Would you agree? Or
when you don't have funding, you have to sort of get by and get the experience and the opinions and the point of views without hiring the team full-time, paying salaries. And I think having committed board members and advisory board members is really good way of getting that experience. And obviously, when you have those signed properly, you are able to use those in the funding discussions and funding deck, so that you actually can show that you have tens of maybe hundreds of years of experience behind you, backing the idea. So it's not you and the idea. It becomes much more.
Yeah. And maybe that's also the question on who should you look for to be in your board or advisory. Because it's, to your point, it's almost, instead of necessarily, at least in the earlier days in your startup, instead of hiring for full time, but that board or that individual, that chair should be able to then actually deliver value to you. It's not just sitting and, look pretty or a name for you, right? They should actually help you with like sales introductions or marketing or whatever it might be.
Yeah, fully agree.
So let's talk about money, Lennu, because when you are a startup founder, you have a runway, you will run out of money at one point. When you then get to the point where you need to fundraise, you need to get money, what's your approach there? Is it VC or elsewhere?
There's basically 3 levels of funding. First one are the grants, which is basically free money given by government, different organizations in different countries, but most of the countries have something available. Just utilize that initially. That is non-diluting free money to get things started. Then the second layer is the loans, which is obviously you need to pay them back, but quite often the loans are structured in a way that the payment schedules are flexible. You don't have to hang yourself to the original plans and so. And then especially the product development loans, quite often provided by the government entities, they have this self-funding part for which the investments are the perfect solution. So it's usually a combination of getting the grants whenever possible, then having loans in a scope that is possible, and then maybe having 30% of the loans invested by the angels or VCs. So that's I would say, wise usage of both the money and the capital you are giving out. So sort of starting from zero, raising maybe 200, 300,000 euros in funding and giving away 20-30% of the company, that doesn't make any sense to me.
I'm curious, because you are an angel investor yourself as well, and I'm wondering, when do you see you would like to go towards an angel investor or investors or VC?
I think the sort of threshold comes from the investment criteria of the VCs. The angels are quite often coming in with ticket size from maybe 50,000 to 100,000 euros each. in the sort of founding seed stages, that's enough. That's really good for covering the really the biggest risk phase of the company. Then whenever you get to, say, 100,000 of monthly recurring revenue, the scope of the business starts becoming interesting to the VCs. VCs are always looking for businesses that they can see the equation where they put in 500,000 or million or 5 million, and they have the metrics and sort of machine that cranks up the volume in a way that they get 10x out. So that is the equation they want to have, and sort of going in really early stage where the product isn't ready, the market hasn't been validated, there isn't any functional sales organization or models, marketing isn't there. So there's so many risks they try to avoid. So the VCs are usually coming in at, say, 100,000 K a month.
And as yourself, like an angel investor, what are you looking for? What makes you go in to invest in a startup, or what are you looking for that will then allow you to take on that risk?
Yeah, there's quite a few different criteria I have when investing to early stage startups. The first one is I need to understand the business model and the idea well enough. This has led me to skipping a lot of opportunities in different areas I'm not expert in. So I always try to find businesses that I really understand, and I see the problem preferably myself, or I have sort of it's well explained, easy to see, and then the solution obviously needs to be there. It should be doable, and again easy to understand and see being sold. But apart from the idea, the team is really one of the key things I'm looking at, because the initial idea rarely flies as it is. I've seen a few cases where it really works as it is, but quite often the idea evolves, the business evolves, customers change, the product maybe goes through three different stages to completely different customer needs, with sort of twisting the same idea to different aspects. So there's the team is really critical in making that happen. If the team is not there and the founder is really fixed to the initial idea and the model they have built or thought out, then it's usually not going well.
Would you, so I don't know for how long you've been an angel investor for, but I'm wondering if you have seen, due to AI and just how fast everything is moving, if you've seen a change in mindset and the approach of early stage founders, today versus a couple of years ago.
Yeah, I've seen the change, and it's definitely a massive one. I've been doing angel investments for, I don't know, maybe 12, 13 years already.
Okay.
And sort of when I started doing angel investing, the software was built by hand, and there wasn't any AI stuff available. We didn't even speak about it. Nowadays, it has changed in a way that the best ideas, I think, are both utilizing the AI as in a product. The team obviously needs to be using it, but the big change has been in the scope of the possibilities available. Because when you do things by hand, you are sort of stuck that, okay, I have 1 million to spend, maybe 5 people in the development team. What can they do in 12 months? It's way different now than it was, say, 5 years ago.
Yeah.
The scope has basically, it's at least tenfold what's possible. So the software and startups used to be this kind of small spot solutions to individual problems, some plug into HubSpot marketing. Nowadays, the startups that are going to be succeeding are those who are able to build whole value chains and replace majority of those spot solutions companies are used to. So it sort of changes the dynamic. And older companies, they need to be doing the same thing. So they need to be expanding to out, supporting spot solutions, and grab the share of other companies.
EU sovereignty, that founders in Europe or the Nordics are not good enough to think global first and think bigger, and we need to be bolder and so on. Do you think AI have played a role in that? Because now it is easier to do these things, and therefore it's easier to perhaps also think global from day one versus both very narrow scope, but also narrow market. Do you think that have anything to do with the way we're seeing founders go about hunting towards unicorn status and so forth?
The sort of access to actually advisory type of thing, that has changed a lot, because with AI, basically anyone has access to a sparring partner who is able to utilize all the information in the world in sort of really smooth way. Doing market research for something really remote is possible. You're able to get at least rough ideas how many potential customers there would be in a certain country, how the value chains work. Those are quite often different in different countries. So having that information available through AI, it really changes what sort of becomes possible in your thinking. Because that's where it starts. You need to be able to imagine or think bigger in order to get there. So that's, I think, a really big change.
I wanted to go back to the fact that you have gone through 4 exits, Lennu, because I think that's pretty cool. And not many can say they've been through 1, let alone say you've been through 4. Looking back, what has been your biggest learnings? What has been the biggest mistakes that you have learned from the first to the second to the fourth time?
I don't have any blueprint for sort of serially generating the exits.
Yeah.
It's always case by case. What's visible is the things the especially industrial buyers are looking for. So the buyer is always aiming to multiply the investment somehow. And the multiplication could come from many, many different things. It could be that they are buying market share. You might be a market leader in some market, which happened with Paytrail. Paytrail also happened to have really good technology that can be utilized elsewhere as well. So that was the market or the exit driver. In some cases, it could be the team with a really, really good tech team in place. It could be that they're buying just the technology. There's a bunch of things that the buyers are interested, and sort of recognizing these different exit drivers or buying drivers from the other perspective, that I think helps tremendously in the exit discussions, because you are able to sort of understand what the buyer actually wants, what's the key thing they want to have from the company, and then you're able to maybe put some value from the buyer's perspective to that company. Yeah. So the way you are thinking could be totally different from the buyer's perspective.
So almost again, just like in any other sales situation, understand your customer and understand what is it that they're actually interested in buying in the first place.
Yeah, exactly.
I guess, like, I had a young founder asking me to ask this question to my next upcoming guest. And he was saying he feels like he's being drowned in advice. Like, how do you filter through all this noise? What has been your guiding principle, or how have you done it, or would recommend others to think about all this wonderful advice people are so keen on giving?
I'm not sure if this works generally, but sort of how my brain works is that I have this scaffolding, like structure building thing that is built piece by piece, and all the advice, all the situations, all the experiences sort of add up to that scaffolding around the building. And some advice fit to different places, obviously, in that scaffolding, and some just don't. Like, if I can't find any relevant position to those advice, or they seem to be not aligned to that scaffolding I already have in my head, then it's sort of it doesn't feel right for some reason. And sort of understanding that there is a million of different aspects to all of these things. Every single person giving advice has their own perspective, own experiences, own mistakes, own successes. Everything is different depending on who's giving the advice. So sort of just recognizing that not the advice might be correct, but it may not be suitable to your situation. So that's the sort of thinking model I have.
I wanted to hear, what are you worried about as a founder, as you are building Rise Financial Group, as you are now, on it again as a founder and CEO? What are you worried about? What do you think the future brings for founders in this AI era?
From founder and investor operator perspective, I'm really not worried about AI in any way. I just see it as a massive opportunity to utilize in so many different ways, both in the way the teams work, the companies work internally, and then also in the products. So I see it as massive opportunity. On the other side, which is not that positive, is the effects of AI to society in sort of bigger scale. So not everyone, and I would say it's only a minority of people who are able to keep up with the pace of the change the AI brings. And everything from social security to hiring and firing people is changing so fast.
Yeah.
That is a bit scary, yeah.
I believe that the gap between, historically we talk about digitalization, and you would talk about, I think it's like these 5 or 6 different personas of how fast you will then adopt to this new digital change. And I think that's going to change completely. And you will have more or less 2 camps. And that gap between those camps, the ones who adopt, move fast, and those that are super latecomers are going to be bigger. Because I think either you are techie, you are curious, you are, just diving into it, figuring it out, or you are skeptical and you're staying behind. I personally see that there's going to be those original groups are going to mature into 2 bigger groups, and then that gap in between are going to grow.
Yeah, I fully agree with that. That is going to be a challenge.
It is scary because we should also make sure that we don't leave the others behind. Look at in Denmark, for example, elderly, when they have to take the bus, like if they don't have a mobile phone, or if they don't have a credit card, like cash is not a thing any longer. And again, then you're excluding a subset of the society for accessing a service.
That is a big topic. It remains to be seen how it's going to play out. The biggest industrial changes in past have usually led to positive outcomes in, say, maybe 20 years, 30 years, something. But this one is happening so fast. We don't have time to adapt.
And now also even the big tech giants are asking us to perhaps take a break and slow down a little bit and make sure that we do regulate and that we do understand what are we actually doing, which I think is also alarming. They've done it before, highlighting risks of AI and artificial intelligence. But then again, you still have a huge part of the market that don't follow any rules and do whatever they want. So fraudsters and so on, right? So we all need to be super alert that not everyone follows those rules, even though we put them in place.
Yep.
Yeah. Lennu, anything else you would want to share? Any perspectives? We talk about exit as a founder. Any kind of viewpoints you would love to share before we wrap up today?
Yeah, I think the times are better than ever to build something that is really significant and really enables you to change the world. I'm really positive about the time we live in. I love to see where this goes.
Yeah, it is going to be really fun. I think even just the last year, 2 years, so much have happened. And the next 12 months are going to be crazy, I think.
It is.
Lennu, it has been absolutely a pleasure to have you on this mini series for Pantrium. Thank you so much.
Thank you.
Thank you so much for spending your time with us. I hope you enjoyed the show. If you have feedback, topic ideas, or guest recommendations, we are all ears. Pantrium is growing thanks to our community of listeners. So if something resonated with you, we would love for you to share your favorite takeaways. And just a quick note. The views shared by our guests are entirely their own and don't necessarily reflect the companies they work for. That's it for now. Thanks again for tuning in. Until next time.